Good evening, everybody. Not even a spring evening yet here in Pittsburgh. And my lawnmower guy has already mowed the lawn 3 times. It hasn't even been warm enough to go outside yet. Okay, as we can see, this is why my comments in the afternoon comments or the newsletter today was that the market trend is very easy to identify or project. You combine the candlestick signals and the T-line. So all we have to know right now is that we're basically in an uptrend because the Dow, doing kind of a bullish flutter kicker type signal, J-hook pattern, broke out through the 50-day moving average today. And you apply the same scenario over here to the NASDAQ, staying above the T-line, also using the 50 and the 200 as a support level. Bullish sentiment is pretty much in control. Now it's just a matter of how long will this keep going. I shouldn't even ask that rhetorical question, because all we have to do is stay long until we see a sell signal and a close below the T-line. The S&P 500, pretty much the same scenario. Up through the T-line, up through the 50, making the prospect of a few more trading days or more upside up here to the 200-day moving average. So the conundrum will be crude oil prices at $12 a barrel. Who would ever thunk it? Let's see what some of the other things are doing. Soybeans still in a slow drift. Wheat, kind of the same scenario. Hogs or cattle, kind of in a wedge now after some real big price moves. It looks like it's starting to bottom out, and hogs it's coming up pretty good. So you can see the doji sandwich, We are going to be setting up a service here pretty soon for trading futures, which is a lot more, I want to say, active, or a lot more, a lot quicker profits because of the leverage. So keep an eye out for that. Now what do I want to look at? Gold. Kind of hovering in here. And can't think of what else. Silver. Kind of sitting here on the T-line. Okay, the ones that are moving well, and I didn't even bring them over here. Let me do this. The reason I want to take a look at these first is pretty much because they are the ones that we've already identified as doing well. And this is a kind of your bobble breakout on our NNA. Look at your little slow curve pop up to the 200, now going through the 200. We recommended blue today because of that same type of setup. Here's your bobble breakout, J-hook pattern, classic pattern. Jim, is your microphone still on? Oh, okay. And so this one has the prospect of kind of bursting all the way up here. There's a gap right here to fill. There's a gap right here. So what makes this type of pattern setup very interesting is the different option strategies you can put on that could be very lucrative. One, you could put on a spread. Earlier today, the 60-65s were at $1.90. They could go to $5 very quickly. Or 65-70 was $1.45. And all the way up here to the 70-75s, which were at 85 cents. All of these, if this price moves, can expand dramatically with less exposure or not a lot of money at risk, but the leverage to the upside is excessive. So you've got that with the same type of chart setup as we're seeing in Tesla. So this becomes a high probability wave 3 after wave 1. So I'm showing these because these are the type of chart patterns that become very easy to identify. The classic pattern, fry pan bottom, J-hook pattern combination, making INSG a wave 1, wave 2, wave 3 much higher. Now some of the what am I trying to say? Biotechs backed off a little bit today, but didn't do anything that would tell you there's a change of investor sentiment just yet. That's INO. Here is Codex. Still at a 45 degree as long as it stays above the T line. So all of these that have been recommended, you can see what's happening based upon the signal or pattern and what they're doing at the T line. So you can see CRY is still moving up, still using the T line crunch, now making that the 200 your next likely target. PBYI, same scenario. Fry pan bottom, J-hook pattern. If this opens positive, expect moving back up into the recent high area. So the reason we want to do the patterns versus just finding an uptrending stock, because these will have much stronger price moves. So basically you're making better hay while the sun shines. And Yeti, there's the obvious. Bobble breakout, there's your next target. ZS, there's your J-hook pattern. Look for this to break out. Another wave 3 could be in progress. Not another wave 3, a wave 3 could be in progress. And APLS is kind of your classic, just T-line support. You just stay long until you see a sell signal. So the nice thing about being able to use the T-line in conjunction with your buy patterns is, remember how much fear there was in the market just a few days ago, not a few days ago, a couple of weeks ago, and how people were saying this market was going much slower. Then it started moving up, and all the people were saying that there was a good chance we're going to be in a double bottom. Well, you don't have to listen to any of that. You just watch to see what's actually happening in the markets. And so that is a good reason why I've became so convinced about candlestick signals, is because listening to the news, listening to all the experts, and watching the markets were completely disjointed. There was nothing to do with each other. that the market was always correct, obviously. Now, USO is an ETF. The reason they're splitting it, or reverse splitting, because if you're an institution, the reason you use these ETFs, let's say you're pretty heavy on the oil stocks for some reason, or let's say the other way. Let's say you're pretty short the oil stocks. Well, then you might want to buy the ETF to kind of hedge your position. So the ETFs are essentially set up for the institutions so that they can hedge their position. So let's say let's say you were short a lot of oil stocks, but you thought there might be something happening tomorrow that would affect that. So instead of trying to scramble around and liquidating all your short positions, and you're not sure yet whether there is going to be a reversal, you just go in and you buy a lot of the ETF to be your hedge, that if something positive happens tomorrow, if all your positions start moving positive against your short positioning, at least the ETF is offsetting that for you. So that was a long answer, Dan, to say no. USO can't go bankrupt. It's just a fund. Sava, there's your breakout. There's your 45 degree. And ICAD, there's your breakout. There's your 45 degree. So just a lot of good positioning, and say a lot of good position. It's probably because making some very, very big profits in this market. And it's all based upon not listening or not hesitating when we saw reversal signals in the oversold area. NUVA, I would suggest, is still going toward the 200-day moving average. And CrowdStrike, all you have to do here is stay long, put a logical sell stop, probably the halfway down that candle right there. So any of these positions that are up in the overbought condition, just put a stop someplace where it shouldn't trade. Whoops. So you're in the overbought area, Doji, you put a stop right here, because logic says if it comes back down through there in the overbought area, at least they're probably coming back to test the T-line. And why would that be kind of a good place to watch for profit taking? Because you got wave 1 and wave 3 approximately the same right now. Just that visual alert that there might be a possibility that this is the area where people are taking profits. Continue to watch ENIA. I mean, it worked well with your best friend gap up, then your gap up doji right at the 50. So if you were taking profits, that was a good place to take profits. Now you can see what's happening right here. Starting to see some buying, maybe the next wave taking you up to 200. They're not difficult. There's wave 1, then it kind of consolidated, and then this is wave 3. Wave 3 and wave 1, pretty much about the same one, and wave 2 is right here. I mean, this is just a very simple way. Let's see if I can draw it. Oh, you know, there's somewhere on here. Pull your tool. I thought there was one where you could just draw it, but whoops. Here's Oh, I don't know how to do it. I should be able to figure this out. Nah. All right, so wave 1, wave 2, wave 3. Let me see what else we got. AU, the golds were getting a little bit testy early this morning, but you can see they stayed up above the T line. So the gold stocks are still in a good uptrend. Trying to think what other gold stocks. Oh, Kirkland. So right now all you do is stay long as they stay up above the T line. Okay, I think that's about it. There's some steady eddies. Whoops. Like Venda. The oil sold off on a knee-jerk reaction early this morning, like Mplex. But notice what it did. Here's why you always want to stay with that rule that if you're in a fry pan bottom, you can stay long as it stays above the T line. Newmont Mining, yes, that used the T line as a support. And trying to think what else we got here. Okay. Yeah, I usually write them down. Oh, Myrna. Myrna got sold off today. But it's still above the T line, so you can still watch to see if they open this positive. Okay. ICAD working well. So this is where in the options room today, because we know the probabilities of a bottle breakout are pretty strong, that this wave right here could be the same magnitude as this wave. This is where not only can you buy the calls, but you can do spreads up here that will enhance. Oh, Myrna's up big after hours. Let's take a quick gander. Whoops. Yeah, man, Myrna's up $3. Did they do something? But it's up, oops, I'm looking at the other charts. Myrna is right now trading up here at 51.50, so that tells you this J-hook pattern is still an application, okay. All right. Okay. Let me take a look at some. Here's a breakout. Here's your fry pan bottom. Is this too big to go after? Definitely not. This is why you look at a fry pan bottom breakout and you see what what the price move is going to do the next day. This is exactly why we identify pattern breakouts, especially a fry pan bottom, because this has the capability of running up another big time. Neil, yeah, it all depends on how long the virus information stays out there. I mean, as long as it stays in the forefront, they're going to get attention. Here's another little slow curve breakout on GTHX. Slow curve, little gap up. Let's make this big enough where we can see it. You can see how the T line acted as support. So you got wave 1, wave 2, now going into wave 3. So there is going to be a bunch of stocks that look good tonight. It's just a matter of what your appetite is. Here's a $4 stock, AQST. You can see wave 1. You can see how wave 2 was very indecisive. And note where this little kicker type signal occurred. Gapping up, doing wave 3. Now if this opens positive, what do you got going on? Probably another 2-point run to the upside. So this is what clearly puts us in a situation where we can identify which stocks are starting to get some good activity. BSIG, BSIG, BSIG. Kind of your little mini scoop pattern followed by a doji sandwich. There's your slingshot effect. That was the same thing we were looking at Chesapeake, because there's your scoop pattern. And notice when they backed all the oils out today, what happened? They still use the T-line as support. I'd still watch Chesapeake for something that could break out big to the upside. With all of this, does it seem interesting to play Labu? Well, that's, Cheryl, it's the other way around, or whichever way you want to look at it. For the other ETF. The other ETF. Oh. So you got Labu, which is a triple move. And then I think is it BIB? That may be the double one. You hold on to your individual ones until I tell Jim to do the double line. We've got a lot to do. Richard, that's up to each individual. Now I'm using the May 15 just to give me 3 weeks to get a good price move. Now, if you want to be more aggressive, you can use 2 weeks out. If you want to be more conservative, you go 4 or 5 weeks out. And so that's what, well, yeah, that's a good lead in. That's what we're going to be doing this weekend. Remember was it last weekend? I can't remember. We advertised the 1-hour training session that went 4.5 hours. Well, we're advertising the options training that's 3 hours. So order a pizza because we're going to be here for a while. Yeah, Blue might only have monthly options. So you have to see whether whatever trading entity you're using, whether it's an options, whether you can, what makes the most sense. And if there's only monthly, now you have to figure out whether that is a worthwhile trade or not. For option trading, is there a deal? We've kept it low because, yeah, we don't get very many non-members. So it's basically one price, and that's for 2 reasons. Because for the few people that we get that were non-members at a much higher price, it was running poor Abraham ragged. So we just decided on this one to make it one price and keep it at the low end. So CB, I would make you this guarantee. You'll get more than your money's worth. And hopefully we'll get a few non-members, but we usually don't get a whole lot. Trox, another one with the kicker signal, T-line crunch, bobble breakout. Where do you think your next likely target's going to be? Up here. You know, at least they're going to fill that gap. Blue is not very liquid. No, you didn't think that. It traded 1.2 million shares today. Well, Shazam, I've goofed up again. No, I'm sorry. No wonder my screen has turned all colors. Well. I am not doing very well by having this other chart up. Blue traded, looks like 1.5 million, 1.6 million shares, so it should have enough liquidity. Okay, so look at all these patterns. They're all doing patterns we recognize. Fry pan bottom, kicker signal, T-line crunch, bobble breakout. What happens when they break out? That's when everybody else is paying attention and they start coming in into these trades. RGS, bobble breakout. Where do you think the next likely target is? Up here. So any one of these are producing situations. M-chip, look at your slow curve, fry pan bottom, gap up. Where's your next target? Slow curve on Helen of Troy. First target, then I would think coming back up into this range. Domo, wave 1, wave 2, wave 3 taking you there, and probably back up to fill this gap. HS, yes, whoops. What we're going to be looking at is what options, that's a redundancy. What you want to look at as far as your risk reward, as far as how far out to expiration date, what strike price, how do I analyze first of all, we analyze what the underlying stock is doing, what type of pattern. Then we kind of calculate how long will it take to get here. Well, maybe only a week. So maybe on this one we want to give ourselves some time and maybe a 2-week expiration. If it's something that may take longer to get up here, maybe we do 3 weeks out of the monthly calls. So, and the other thing was, that's right, that's the name. So we're going to start from ground zero, which means people that are somewhat familiar with options are going to go through a little bit of review for the first 30 minutes of what the advantages of options are, what the disadvantages are, when to use just calls and puts in conjunction with the different type of patterns, how to use the bullish debit spreads, how to sell put spreads, which is bullish, and then how to use a combination of both to kind of offset your risk reward. Yes, so the first part of the session is just the basics. And then we're going to go through step by step. And this is not going to be one of those trainings that I've seen so many people go through where they know less when they're done with the training than when they started. We are going to make sure that everybody understands, there's the link to it. Everybody understands exactly what the ramifications are, the risk reward, and what strategy is best to use with specific patterns. Steve, no. Oh yeah, if you're going out 2 weeks, 3 weeks, or in the case of Blue only had the monthly, So we make an evaluation. Since that's the only thing we have, what's the best strategy? Do we do a bullish spread? Do we sell a put spread, which is bullish? So we're going to go through all that. Now that's why I'm saying if it's advertised as 3 hours, you can bet your sweet bippy we're probably going to be there from probably 9:30 till 4 in the afternoon if we can get out then. But what I want to make sure is that everybody understands exactly what the ramifications are of each strategy, so that the next time you look at a chart like this, you automatically say, oh, let's see what the calls look like. Let's see what the bullish spreads. Let's see whether this is the best bullish spread. Is this the best bullish spread? What our strategy is. And you don't have to spend, yes, so that's the closest one that we bought today. You don't have to be spending 45 minutes, an hour and a half each night trying to figure out your option strategy. If it takes hopefully 10, 15 minutes to find the best trades, then hopefully another 7, 8, 10 minutes to figure out what the best option strategies are. Okay, so much for that. Where are we? Oh, so if you look at a chart like this, look what we have, kind of a kicker signal, bobble breakout. What's that tell us? There's probably a lot more upside on MAG, which is one of the silver stocks. And there's your classic fry pan bottom J-hook pattern. Where do you think your next prospective target is? Well, if this started, let's say, from 4 and went to 8, this is probably going from 8 to 12. PHR. Look at your doji sandwich, fry pan bottom, doji sandwich right here at the breakout level. What do you expect? More upside. There's kind of your slow curve, doji sandwich, first target, second target. So what we're really seeing in this market is, unless something dramatic happens, you're seeing a lot of patterns that we can identify. There's your T-line crunch on Ollie, right up through the 200. Now you start looking for potential sell signals, but I say looking. You stay long until you see a sell signal. And here's Angie's list. There's your kind of your bobble breakout. Where do you think your next target's going to be? Up here. Looks like there's a wee little teeny gap right there, getting you pretty close to the 200-day moving average. So this is kind of why we're pointing out some of these setups, is because not only do you have a high probability that the trade is going to move in this direction versus this direction, there's going to be a lot of stocks that move up in an upward market like this. We're looking for the ones that are moving up like this in an upward market. PSN. Click. Another bobble breakout. Land's End. Another bobble breakout. Where do you think the next likely target is going to be? Up here. It's about a 50% upside potential. So again, we want to find the things that are going to produce much stronger price moves than merely uptrending stocks. This was somewhat like a cradle pattern. Not quite. It looked better on the other charts. CMD. Now your weed stocks are breaking out. Look at the T-line crunch on CS or CGC, Crone might be breaking out, and TLRY. If this opened positive tomorrow, there's your fry pan bottom, doji sandwich breakout through the the 50-day moving average. What would that imply? They're eventually heading back up to the 200. Dan, best place option trades. I'm usually doing it during the morning. That doesn't mean you can't go after things like this. I'm going to go to the 10-minute chart because you can see what happened today. Came up, look at your 10-minute chart. Came up, failed at the 50, pulled back. Maybe that's where you might want to start buying some calls on the basis that you think the uptrend is still in progress. So you can do that. But I'm usually buying based upon a breakout or a strong signal. And let me go right back to blue, since that we knew as soon as blue opened positive today. That's why we recommended it last night, that if it traded positive, what did we have? We had a bobble breakout. Now, can you buy it always at the most optimal time? Definitely not. So it might be buying here, I might be buying here, and then it does this. Or I might be buying here, and it does this. I don't really care. I mean, it's better to be buying right here, or it's better to be buying right here than up here and then pulling back. But you don't have that at this point. You don't know whether they're going to take this right up through the roof. You don't know whether they're going to take this up through the roof. So why are we buying in the first place? Because our daily chart told us that we have a pattern breakout. To try to get the exact time to get in doesn't really matter. If you're buying the calls, and I can't remember what I did today. I think I bought the May 60s at 477. Could I have bought them at 458? Probably. But I wasn't worried about that. I was buying this not because maybe you could have gotten it at a better price, 458 versus 477, and they closed at 5 something. I was buying them because at 458, 477, 503, 510, if this works like it should, those 477 calls should go to 12, 15, 20 if this pattern works the way we think it should. So, yeah, so that's what we're going to kind of work on this weekend, is not so much where people say, oh man, this price is really moving, I'm going to wait for it to pull back so I can get a better price, because that's exactly what you don't want it to do. If you see a pattern breaking out, this is Surgery Partners, there's another bobble breakout. You want to see this moving in the right direction. I would rather pay for it up here versus waiting for it to come here, because if it comes back down here after the open, I don't know whether they're taking it back this direction. I would rather know that I'm buying into the strength, which is confirming the signal or the pattern that I expected. Because I'm not buying this to make an extra 3, 7, 10, 15, 20, 80 cents. I'd be buying this because I expect another $3, $5, $7 to the upside. Oh, so the oil stocks, we did a few of those already. But Nordic Tankers has been acting very strong. You can see what's happening in tank, TNK. Now crude oil, so why is the pipeline and the tankers doing well? Because there's so much oil sitting in tankers that are being paid $150 a day to have it sit there, versus where they used to get $150,000 a day, where they used to be getting $15,000 a day. So they're making tons of money. No, AP. Blue is going to have their earnings on May 7th, whether we own it or not. We're buying it because somebody else is buying it. And by May 7th, it may be up here and we're already taking profits. There's another kind of breakout, a little doji gap up on Wynn Resorts. What's your next potential target? Could be up to the 200-day moving average. Look at your T-line crunch on Goose. What happened when they got to the breakout level? We could see it was being crunched up to that level, broke through. What's that tell us? Everybody and their brother was watching to see what happened when it got there. That told us that we were watching this. We could be buying right here versus everybody else coming in later in the day. In what scenarios should we get out of blue? If it all of a sudden fails over the next day, where would that be? I wouldn't want to see it come back through this level, because if it came back down through there, what's that tell us about the strength of this uptrend? It's probably not very strong. How high can Goose go up? It can fly. Good potential of maybe coming all the way up here, at least coming up here and testing this level. So what do we do on this one? If you bought here, you stay long. If you bought here, you stay long as it stays above the T-line. Uber, same scenario. Oh, pshaw. Look at the T-line crunch. First target. Let's see, we did CGC. T-line crunch. Broke it out. Grubhub. T-line crunch. Bobble breakout. There's your next likely target. Now that might not look like a big percentage move. But what if you bought the 46s and sold the 51s? That might be much more economical or much more feasible to do that type of spread. And POL, there's your your J-hook, fry pan, doji sandwich, T-line crunch. Where do you think the next target's going to be? Up here. And nail, the nice thing about this chart is this moved up that amount. That was about 14% today. This can move pretty heftily. Question on wave calculations. When you are calculating wave 3, are you using the high? No, just anywhere. We're not trying to be exact. Now I forget which ones we were looking at. We're not trying to be exact. We're just trying to calculate about. Let's see, what was I? Oh, Tesla. Tesla. If this is wave 1, wave 3 from somewhere around in here could be about the same magnitude. Doesn't have to be exact, but if we got up here and we can start calculating that this area is about the same as this area, what do we want to do? We want to be a little bit more conscious of watching for a sell signal. And OSTK, there's your bobble breakout. if this opens positive, what do you got going on? A fry pan bottom, a J-hook pattern bobble breakout. What's this tell us? There could be a very strong price move. That one's probably going to be recommended for tomorrow. Because if this one gets moving, that can be a huge upside. And here's another bobble breakout. What's this one look like? There's your fry pan bottom. There's your J-hook pattern bobble breakout. What do we have setting up? If this opens positive tomorrow, what pattern do we have setting up? A J-hook? Yep. What else? No, if it opens positive, there you go. A McMuffin, a classic, a slow curve, and a bobble breakout. Yes. So that tells me if this opens positive, what do you want to be doing? You want to be buying immediately. Fry pan bottom, J-hook pattern classic. Morningstar signal. If it opens positive, a McMuffin, doji sandwich, and a breakout. I mean, this has everything. Look where the bottom hit on this one. Right here at the 50 and where the 34 is crossing. That just makes for an extremely high probability trade setup. So you've got 5 things if this opens positive for reasons to be buying. The McMuffin, the doji sandwich itself breaking out through the resistance level, the classic pattern. I forget how many that was. Oh, the volume on this one, LJPC. Volume today was 530,000 shares. So not a lot, but not any problem. A McMuffin is a Morningstar signal. And if it opens positive, we've got a doji sandwich. So a Morningstar signal, which is one of the 12 major signals, tells us it's probably going to be an upside. A doji sandwich tells us there's probably going to be more upside. You combine the two, so you have a morning sandwich, or basically your McMuffin. Now, obviously, that was not a Japanese race traders terminology. That was just a clever play on words. No, Ron, no. The reason we don't need to look at fundamentals is, what do you think? Well, if you take the definition of a candlestick signal, which is the accumulative knowledge of everybody buying and selling during a specific time frame, if people are buying, what do you think 90% of them have already done? They've already looked at the fundamentals and they made their decisions of whether they're going to be buying or selling. All we're doing is analyzing with candlestick signals what everybody else has done as far as their fundamental research. An ancient Japanese sandwich, that's right. Okay, so what were we looking at that? That was on LPG. Yep, the McMuffin. Okay, so there are lots of stocks. Not only you're going to have good trade setups. M-chip. There's your slow curve. There's kind of your double doji flutter kicker. There's your first target. Now, percentage-wise, it might not be huge, but you could probably put some very high profit spreads on, whether it's an 85-90, may be much more lucrative than just buying calls right here. Okay. So are there any general questions on candlesticks? Or any questions on the option training? Doug, usually people will come in and they will do text before the market opens. Now, each night, we put out 2 or 3 stock picks. You have a chart we can download. Do you have a chart we can download? Oh, Cheryl, you should. Don't you have your own charting service? Candlesticks. I still don't understand the question. On everybody's own charting service, no matter what it is, you can put candlesticks on it. Thompson, no, we're keeping it one low price because we don't usually get very many non-members. And to make the non-members price $4.79 versus the $2.79, we only get a couple non-members, and it puts a heck of a lot more work on Abe to set up. And right now, after his new baby, I don't think Abe's getting very much sleep at night, so I'm trying not to put as much pressure on. But I will give you the Oklahoma guarantee. If you don't get more than your money's worth, I'll be a son of a gun. Adam, usually you're paying cash for options, which you can still do out of your margin account. But I don't think you can buy options on margin. It's got to be a cash purchase. Do you think your recommendations, Roy, I would like to think that we have enough influence to move stock prices around? There's not. I would bet you dime to donuts if we have everybody jump into a stock that maybe we could do 30 or 40,000 shares, which in most stocks that I recommend aren't you really going to move the stock price around. Oh, Nancy, I don't know. I've always had my money in one account, and it's always been a margin account anyways, just so I don't know the answer to that. Whoops. Oh, I think that if you are a member and you do the option training, that you get, I don't know how long, is a week or a month of free membership to the options room. Roy, no, my recommendations, and I'm usually looking at things that are enough volume that if everybody jumped in all at one time, it still wouldn't affect the price. Is OST a weekly scoop? OSTK. Let's take a gander here. Go to weekly. Oh, it is like kind of a scoop pattern. You know, wouldn't have made that decision based upon that. I'd be making it more that you got a fry pan bottom and a potential of a strong breakout. Where are they? I have different names and descriptions from VectorVest. Not there anymore. Where are they what? I'm trying to see Cheryl's, where are they? If you've got a chart system on whatever you're using, whether it's at the brokerage firm, there is a way where they will show you how to set up your charts. You just have to go find. See, on these, if I go way over here off the chart, I've got a whole slew of things that I can make it a bar chart. I can make it a line chart, or make it a candlestick. Uh-oh, I wrecked it. Candlestick chart. Oh, you're looking for a candlestick poster. Is that what you're looking for, or the flashcard, or the mouse pads? Oh, see, there's the mouse pad that you have right here on your desk, and then the poster is 2 foot by 3 foot that every American family should have hanging up in their living room. A J-hook pattern is, whoops, where am I? A J-hook pattern has a prerequisite of a J-hook of a strong price move like this. A scoop pattern, a scoop pattern has a flat handle like this, and then the scoop. Yeah, more than likely, they want you to sign a margin agreement to do options, just because it kind of has terminology in there that you're sophisticated enough to buy options. CB, yes. If you're not a member of the options room, that if you do the options session, then you get either a free week or a free month testing out the options room. Oh, for more than a couple of potential setups, do you save those entries prior to market so you can get in quicker at market opening? I don't know what that, let's see. For more than a couple of potential setups, do you have those entries prior to, oh, yes. The picks I put out are usually the night before. So if you go to the stock pick area, you can see the video of why they're being recommended. Oh, still. Please show wave 2 and 3. All right. The next 12 signals. Oh, that's an idea I never thought of. Table. Irina, we have the normal room, which you're in right now, and then we also have an options room that has about 25 people in it. And the reason we separated them is because option strategies and option terminology is a lot different than just recognizing the patterns. And yes, it is a separate membership, but when you combine the two, it's discounted. Bill and I have those. That's not those exact ones, but I will show you the characteristics and risks of options and how we circumvent those using the candlestick charts. So Saturday is going to be a combination of learning how to use what options are, the advantages, disadvantages. We only do 3 strategies: calls and puts, bullish and bearish spreads, and selling spreads, which is a bullish transaction. And then the 4th is the combination of those, where you might be buying calls and buying a spread up higher. So we're going to go through all that so that you kind of reduce your risk but enhance your upside potential. And there was some, and then we're going to go through which ones of those systems you use on each type of pattern that we're looking at or analyzing. Okay, so with that, Jim, let's go ahead and do the double line. All right, and in 3.2 seconds, do the next double line. Merck, also a bubble breakout. Type pattern setup. You can be buying this one on positive trading. Baxter Labs, a J-hook pattern. Oh, no, we did. Yeah, so there's a J-hook. A strong uptrend, a pullback. So this becomes wave 1. This becomes wave 2. And then this would become wave 3, moving out into higher territory. Hertz, nothing exciting yet. If you were short, you would have covered your short. I wouldn't be going long until they get up above the T-line. And how to fix the options positions. Arena, that is one of those situations that if you go to somebody's options class, they're showing you how to fix a bad trade. It's with candlesticks, we go through with another perspective. If the trade turns bad, we close out the position and move our money someplace else. I hate to use this illustration, but like 2 guys standing at the urinals, one saying, "At Harvard, we wash our hands after we pee on them." The other guy says, "Well, at Cornell, they teach us not to pee on our hands." So what we try to do is, if you're in a bad trade setup, close it out, because that you shouldn't be there, not trying to fix your option trade. Cars, whoops. You can get ready to buy this little slow curve, anticipating coming up to the 50 or the 34 of the 50. SYF, same scenario. You can buy this one based upon kind of a trend channel wedge. If this breaks out, they'll come up to fill this gap here at the 50. Oh, Ronald, that's a smorgasbord. I'll do a couple. Marathon Oil, stay long as this stays above the T-line. Halliburton needs to open positive and stay above the T-line. AI wouldn't be long or short, not going anywhere. Nally, you only own this one because it pays a good dividend yield. But I wouldn't be, if you're long, you stay long, I wouldn't be buying it right now. COG, another J-hook pattern that you can be buying on positive trading tomorrow. And AER, you got a left-right combo today, and you've got a wedge. So if you're buying on positive trading, you want to make sure it breaks out through the top of that wedge. And BGS has to open positive to want to stay in this uptrend. You can see it's just a slow uptrend as long as it stays above the T-line. British Petroleum, not anything wild and exciting just yet. If you're in it and you're planning to stay in long term, you want to see this eventually get back up above the 50-day moving average. TW, there's your J-hook pattern. And notice how the wave, you got wave 1, wave 2. Notice how wave 3 is starting with your best friend signal breaking out. You can buy this one on positive trading tomorrow. Just don't let it close back below the halfway point of today's candle. NVIDIA, another J-hook type pattern setting up. Another one you could buy. If I was buying tomorrow, I'd want to see it come up through today's high. That would tell me wave 3 is now in progress. Bed Bath & Beyond. So you've got, it's not a great chart. If you're long, you stay long. If you're thinking of going long, if you're buying on positive trading, it has to get up through the 50 real quick. And CGEN, I would just stay long. You're getting a little bit toppy. I'd still use the T-line, which will probably be up here tomorrow, as my stop. I wouldn't want to see it close back below that level. Kroger, just stay long if you like this one. It's not a very good trader. It was a while back when it made a big run for a couple years. Right now, it's just a slow mover. If you like it, you can stay long. Toronto Dominion Bank. You can buy this one. You just watch to see what it does right in here. Again, going up to the 50. It's not anything real exciting until they break out through this sideways wedge. Not wedge, but sideways channel. And Apple, you can see that's kind of a J-hook pattern with a bullish flutter type signal. If it starts trading positive, giving you a doji sandwich, breaking out through there, you got wave 1, wave 2, now going into wave 3. And plug, J-hook pattern. You can buy this one on positive trading. Work, nothing real exciting on this one. You can see the resistance, you can see the wedge. I wouldn't be long or short on this one. Just nothing there right now. AMRN, another little slow curve you can be buying with the expectation coming up. You got a big gap area to fill. Micron, nothing there either. You can buy it, but you've got a lot of junk to get through, like this downtrend, the 50 and the 200. There's probably, simply analyzing this, there's probably a lot better places to have your money right now. There's too many good, strong charts out there. Guild, nothing wildly exciting on this one. You've got a slow uptrend, but it is slow. I wouldn't want to be trading this one. There's just no direction. And ANTH, oh no. That one's not coming up for some reason. Roku's setting up for its little J-hook pattern. Fry pan bottom, breakout, pull back. You can be buying this one on positive trading. Just don't let it come back and close below the T-line. Tesla, where would you place a stop loss at today's green candle, open or close? Would you ever use the T-line for the stop loss? More than likely, I would probably use the halfway point of this candle as my stop, which might coincide tomorrow with the T-line. The reason for that is if this is a J-hook pattern breaking out through this level, If they open it positive and close more than halfway down this candle, that tells me the bears are still in control. You want to be right back out of it and wait for the next buy signal. Back scratcher comes in handy. STX, nothing. I wouldn't be long or short. You can see there's no decisiveness on this one. And Walmart, nothing there either. Got a bearish left-right combo. Oh boy, if I was long, it has to open aggressively positive tomorrow. If it opens lower, close it out. There's nothing there. I think we did Abbott. J-hook pattern setting up. Boeing, bearish. You had this little trend. A wedge that broke down. You stay short until you see a buy signal and a close back up above the T-line. And SIG finally broke out today. You can be buying this. It looks like it's broken this little downside wedge with a wee little best friend signal. I would suspect your first target is up here to the 34. I think this is another one of the REITs. I think it pays a decent dividend, but I probably wouldn't, if I'm trading it, I wouldn't be long or short. Macy's, another one that's in trouble. If you like it, you can buy it. I watch to see what happens once it gets up here to the 34, if it can get there. Still kind of in a sideways consolidation stage. Hertz needs to open positive. Marathon Petroleum, very slow uptrend. All you can do is stay long as it stays above the T-line. And these oils, I'm guessing, might be moving in the right direction, but it may take them a little while to get anywhere. You're starting to see some weakness in INO, but it looks like it's going to open positive tomorrow. If it opens positive tomorrow and you own it, you set your stop at today's close, because if it opens positive and doesn't go this way, comes down through there, that's telling you the selling that started yesterday or today is still in progress. You want to be out of the trade. Space, nothing here. Not until you can get back up above the 50. Silver, kind of flat, wouldn't be long or short. USO, whoops. Right now you stay short. I think crude oil is still getting slammed. It's down to 11.79. That's a one that you just stay long. Now you've gapped up in the overbought condition. I'd have a safety stop at today's low. If it comes down through there, they're coming back to test the 200 to see if it's going to act as support. And Oracle, another J-hook pattern bobble breakout that might be in the making on positive trading. Nail, we did triple leveraged, which means when it moves, it can move a good percentage on any move. Borg Warner, not a wildly exciting one, but there's your bobble breakout with a doji sandwich. You can be buying this one. And Cork, here's your J-hook type pattern, another one that you can buy on positive trading tomorrow. Now, positive trading tomorrow is probably going to be a function of if the pre-market futures are showing the markets are going to open positive or at least flat. Citigroup, you can buy this one. It's just not going to be a very exciting one. You could probably get back up to the 50 pretty easily. So that to me would be more of a spread type trade. Amazon did a left-right combo. Look at doji, 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 bearish left-right combo. That tells you there might be some selling. So if this doesn't open positive, or it opens lower and starts trading below the T line, you want to close it out. Doji, doji, doji on Clovis, bearish left-right combo. You should have closed this one out. So anytime I see something like this in the overbought condition, it's not going anywhere and does a bearish left-right combo, I'm closing out the position. The probabilities have gone against you. And CVS, J-hook pattern, you can stay long on this one. Apache, stay long as this stays above the T line. Sand, just stay long and have a safety stop at today's low. It shouldn't come back through that level. ExxonMobil, get ready to buy this if it opens positive, your J-hook pattern breakout. T-Doc, T-Doc did a doji, and notice where it did the doji. Kind of up there toward the top of the range. If this opens lower, it's coming back to test the T-line, which means it's not a very enthusiastic uptrend. MDGS, that's a toughie. If I'm buying if it comes back up through today's open. That tells me the profit taking is over. BJA wholesale, you can stay long, just watch to see what happens once it gets up to the top of the trend. And Boeing, I would stay short after it broke this support level. Fuel cell, stay long. AMD, not very great. It closed lower. If this opens lower tomorrow, I'd close it out and move on to something else. It obviously wouldn't have broken out through its J-hook type pattern. Snap, that one you can buy. You can see how the consolidation is over. Got a Morningstar signal. If it comes up through this level, you can be buying. Anytime you see something like that, bah. Can't even remember which one it is. Now, if you would do an option trade on this, first of all, I'm less inclined to do an option trade on a stock that low priced. But if I was going to do one, I'd have to look at it. That's that's not really a wild, exciting price move. I want something that, that's why we went after blue today, because we can see what's actually happened. It's done a bobble breakout. ATVI, this one you can buy on positive trading. Again, there's your wave 1, wave 2, right back to the T-line. Wave 3 should be the same magnitude as wave 1. And MDB, it's a slow uptrend. All you can do with this one is stay long until you see a sell signal. We did both of these. They are good charts. There's wave 3 of your classic fry pan bottom, wave 1, wave 2, going into wave 3. And CrowdStrike, just stay long. Use the T-line as your stop. What are the 5 strong buying signals again? Thompson, that's what you're supposed to be studying. That's your bread and butter. A bullish, a doji in the oversold area opening positive, a hammer signal. A bullish kicker signal, a bullish harami. It's a Thompson order the high profit candlestick signals and patterns off our website. That will give you the meat of candlesticks. KMI, nothing wildly exciting. I'd probably be more apt to buy this if it, right now, it needs something to tell you there's a lot of strength in it, and it's not there yet. So Myrna we did, and it would look bleak except for the fact that it's trading up here after hours. So it's still got a potential J-hook pattern with almost a kicker type move to the upside. SFIX, slow uptrend. You can buy this one on positive trading, then you just have to watch what happens once it gets to the 50. And there's a nice breakout on Yeti. That's why we recommended Yeti today, because if it broke through, it'd be a bobble breakout, making your next target the 200-day moving average. C Limited, another J-hook pattern setting up. You can buy this one on positive trading. Oh, yes, Abe does handle the book orders. Will just email me or private message me in the morning, and I'll check up on what's happened. On April 9th. That's a long time. Oh, did you order book number 1? Yeah, we had to order it from Wiley, so he may have just gotten it. Yes, there is kind of a correlation that if this is wave 1, wave 3 will probably be the same strength. That's the exact reason why we're saying trade the patterns, because instead of being an uptrending stock in an uptrending market, you're going to be finding the ones that have a much stronger trajectory because of the pattern calculations. Square, boy, if you're long, you can stay long. It needs to trade positive and get up through the 200-day moving average. And JP Morgan is showing these. How do we get rid of that? There we go. Wouldn't be necessarily anything I would buy, but if you're buying it, you watch to see what happens at the 50, which means this would be, even though this is not a big price move, this might be a very high probability trade, so you put develop a spread for that one. Medtronics, another one you can stay long. You got the good prospect it's going to at least to the 200. XLF, same scenario. And Peloton, you can buy this one. It's not a real strong chart because it opened or traded lower. You'd probably be better off buying Nautilus. Well, no, I was going to say this one was acting better earlier today. Yeah, that might be. Did Jim put the store up? Nothing on ARKG. Zoom, still in an uptrend as long as it stays above the T-line. Oh, Dan, it's usually, sometimes depends on how tired I am at the end of the day. Usually somewhere around 10 o'clock Eastern time. Sometimes it's later, sometimes it's earlier. But the worst case scenario, if you look at them 30 minutes before the market opens, they'll definitely be there. AUDC, get ready to buy this one on Positive Trading. Your best friend breakout. Not necessarily. The moving averages are just moving averages. We're still trying to find the best trade setups. So they become targets. So look at your doji, 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 left-right combo. You could be buying this one because of that left-right combo after that series of dojis, making the 50 your next likely target right across the top of this channel. And SLF, oh, you could be buying it. It's just nothing real exciting just yet. Not a big percentage price move. Okay, so tomorrow, if we see the pre-market futures trading positive, you've got a lot of good J-hook pattern breakout situations. You're probably going to see overstock. You're probably going to see LJPC. And I thought I put a couple other X's on here. Things like this. No, maybe even CGC could break out. So I'll probably have 3 picks out there tonight. Okay, everybody, let's call it a night. Oh, I've kept you way past bedtime. We'll see you bright and early in the morning. We'll see you then.